One stock that is in focus is NIIT Learnings on the back of Q4 earnings. Well, revenue was up around 3%, EBITDA was up around 5%, margins have improved by 100 basis points. However, PAT has taken a hit of around 4%. But to discuss how the quarter has gone by, how FY24 has shaped up and how FY25 looks like, we are joined by Mr. Sapnesh Lalla, CEO of NIIT Learning Systems, who joins us now. Welcome to the show, sir. My first question to you is that, good set of numbers, but profits have taken a hit. So if you can tell us why has that happened?
The EBITDA margin improved. We had EBITDA growth, which was ahead of revenue growth. So profitability of the business has improved. We are also starting to see sequential quarter-on-quarter growth in revenue. That bodes well for the company. In terms of profit after tax, there was a reduction predominantly because of our ETR was marginally higher due to inter-subsidiary transfer of funds.
All right, sir. So you've guided for 380 to 400 crore kind of top line number. Is that going to be more back-ended in FY25? What's the expectation like, and what are the levers for expansion in terms of top line?
We expect to achieve a 12 to 14% year-on-year growth in the current fiscal year, FY25. It will be back-ended a little bit in terms of percentage points. We expect that the first half will grow at a lower pace, and as we see stability in the economy, as well as start getting benefit of new customer acquisitions in the last two quarters of the previous fiscal year and the first quarter of the current fiscal year, as we start seeing benefits from new customer acquisitions, we will see accelerating growth in the second half of the current fiscal year.
Understood. Mr. Sapnesh, so with this 12 to 14% growth, I am trying to understand where will the revenue mix be like, because right now from what I'm observing is that tech and telecom contribution is going down. So what are the kind of headwinds, or do you see any kind of recovery in that segment, and overall how will the revenue mix be like?
Look, we continue to see headwinds on technology and telecom, and I'm not sure if there will be a strong recovery in technology and telecom. However, we see expansion in healthcare and life sciences. We see some expansion in BFSI. We expect to see expansion in professional services and management consulting, as well as some expansion in aviation. So we expect the technology and telecom sector to continue to face headwinds, but compensated by improving growth rates in the other sector. I would say that it's not 2 to 14%, it's 12 to 14%, as was said.
Okay, point taken, sir. And with regard to how export versus domestic is evolving, could you talk to us about some of those levers and metrics going forward?
More than 99% of our business is what you could call export business. Our customers are large multinational corporations based out of United States and Europe.
Sure, sir. So how is the international business doing? If you can talk to us about how it's doing, what are the trends playing out with regard to both demand as well as how receptive clients are internationally?
See, our business is around outsourcing of learning and development. The market, like I mentioned, saw headwinds. We think that we'll see recovery in the second half of this year, given strong new customer acquisition. We also expect wallet share expansion. So while the consumption has slowed down some, we expect wallet share expansion given the strong relationships we have with our customers.
And when you talk about adding new customers, can you tell us as to how many new customers are you expecting to add in FY25?
We added 11 customers last year and 12 customers the year prior. We have a very solid pipeline while it is taking us longer to sign up new customers, it takes more effort and the sales cycles are longer. We expect to do more than what we have done last year and the year before. So we expect to sign more than 12 customers this year.
All right, and on margins, you've guided for 3 to 5 odd % of margins in FY25. What are the levers which will help you get there? And from there, will that be the base for FY26? And can there be scope for further expansion from there? Is that the goal?
We've guided for our margin to be between 22 and 24% for FY25. We expect that our margins will be range bound from there on. Our long-term margin guidance is greater than 20%.
Mr. Sapnesh, I want to shift focus to the financial side of this. From what I saw, that free cash flow for the year was around 232 crores. So I want to understand that you're sitting on a large cash bank. How do you plan to utilize this going forward?
You're right. We have a strong balance sheet, and that's not common in the learning and development space. We have significant growth plans. We've guided for achieving $400 to $500 million in revenue by the time we reach FY28. Our goal is to partly achieve that through inorganic growth opportunities.
Understood.
So the cash that we see on our balance sheet will get deployed as growth capital.
Understood. Okay. And you're focusing a lot on generative AI to transform the training process, right? So I want to understand as to what is happening there. One thing, what are the revenue growth aspects, and what is the kind of contribution in terms of revenue that you're expecting from generative AI?
See, first, it is a tremendous new technology. It is likely to impact how we learn. In fact, how we do almost everything, which is knowledge-based. It is moving at a very rapid pace. We started investing in it about a year and a half ago. About 6 months ago, when we started talking to customers about what we had done, there was lukewarm response. But more recently, about 2 weeks ago, and almost every month prior to that, as we've gone back to customers with the innovations we've made, we've seen strength of response improve, seriousness of response improve. We've done a number of POCs for our customers. I would say we have not done any enterprise scale applications as yet, but I think the speed at which AI is moving, we should be into enterprise space over the next 12 months to 24 months.
Understood. And my last question to you would be that what percentage of your total market is outsourced, and going forward in FY25, how will it change?
Only about 10% of the total learning and development market is outsourced. What that means is we have significant headroom. We expect that the movement to increased outsourcing will not be, it's not going to be like a switch that from 10% is going to go to 50% in 1 year. But I think as the economy moves from uncertainty to higher levels of certainty, the propensity to outsource is going to increase, and we are going to see an acceleration of new customer additions.
Understood. Well, Mr. Sapnesh, thank you so much for taking our time and speaking with us at NDTV Profit. That was the management of NIIT Learnings who guided us as to how FY25 will shape up for them and how FY24 has gone by. But it's all that we have on the show for now. Stay tuned for more news and updates on NDTV Profit.